Hi, this is Stephen here from Share Navigator. So I'm going to show you how we're going to sell an option on our existing futures position. So if you go to our MES futures position, so the first thing to note here is you must know whether it's an MES future or an ES future. There's a big difference between the two. So you can see in this particular position, we're minus one contract of this MES June future. So we're going to sell a put option on this. So because we're short on this, we want the market to fall. Now by selling a put option, we're basically saying that if it falls to a certain level, and in our case, we're going to use 4,900 as a proxy or as an area to get out, we're literally going to commit ourselves to buying back our futures position at that point. We'll have made our profit and walked away. So that's the idea of the trade. So what you're going to do now is type in trade, option chains, and we're going to type in MES. So you're going to see MES is the micro E-mini S&P 500 stock price index. That's the one you're looking for. And we're going to go out here to the May 17th expiry. Okay, so the May 17th expiry, it'll say what this reference here is, just in case people don't know, that's telling you you're tracking the June futures contract there, even though the expiry for the option is May. Okay, so don't worry about that, don't get confused. So what we're going to do now is scroll down to 4,900 because that's the area where we're saying, right, we'll get out of this short futures trade. And you can see here where the bid and ask is 37.50 to 36.75. Now this is pre-market. I'm not going to place this trade now. I'm just doing this video to show you how you would actually go about doing it. So we just click on the bid price. So remember, we've got a portfolio here. We're short on one contract, okay? So all we're going to do is sell one contract of the option. It's the same ratio there, okay? So we'll go back into our MES future to show you again. We're going to go out to May the 17th expiry. We're going to choose 4,900. So that's the level where we're saying, okay, we're going to get out. So you can see what's going to happen if we did this trade now. This would improve our position by 36.75. So let's say our break even on this futures trade was 4,900. Our break even now on this, actually, our short futures trade will be brought up to 4,936, 4,937. 4,936 or 4,937, depending on what price we get. So we'll just click on the bid price. This is what's going to open up. It's telling you what we're going to get in. So the income you're going to get in, by the way, is going to be 5 times what it's showing here. So there are multiples of 5, okay? So just so you know, and what we'll do is we'll just go and click on order and then place trade, and you can do it at a market price or a limit price, whatever you see fit. So when you see me coming in with my trade later on or saying I've done that trade, this is exactly the process you're going to follow. So we click on order up here. It's a sell order, quantity 1 in this situation. Now, if you had 3 contracts, you do a quantity of 3. If you have 6 contracts in your short futures position, you'll do a quantity of 6 here. Okay, so, and let's say we'll change it to market or limit, whichever you want to do there. If you choose market, it'll just fill straight away. Okay, so that's how you place that trade. Now to show you how you would do if you had, not the micro futures, let's say we had the ES futures. So this is the bigger contract as such. And again, we're going to go on the option chain here, and it's the same process. It's exactly the same process. We're going to go out to May the 17th. And we're going to sell the 4,900 puts. And in that situation there, it's the same quote you're getting. The difference here is the multiples are a lot bigger. They're much bigger contracts. So you're getting a multiple there of 50 on that. So you would actually generate more premium as such. So remember, if you've got one short ES contract, you will do one contract of this short put. You just click on the bid price and you go through, click on order. You're going to sell. If you have one contract short on the ES futures, you do one contract. If you have 2, you do 2 contracts, and so on and so forth. And then you're going to choose whether you're going to do a limit price or a market price. But I'd suggest, once you've made up your mind you're going to do this trade, just go at market. Just make sure the options market is open about an hour, let's say. So an hour after the US market open, you could place this trade at the market price. Okay, this is Stephen with an explanation of the ES and MEA's futures. Thanks and bye for now.